Hello viewers, welcome to my channel. I'm Hasham. So in this video, I'm going to explain you about a very important question which is frequently asked in examination, classification of taxes. Last video, I have explained you about the meaning of the term tax, characteristics of tax, objectives, why tax is collected, and the types of taxes. And this theory is very important because every now and then a question will be asked in examination. What are the differences between direct tax and indirect tax? So before starting the explanation of these direct and indirect taxes, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. Now, classification of taxes. Taxes can be broadly classified into two categories, direct tax and indirect taxes. Direct taxes are those taxes which when the government imposes the direct taxes on a particular person, he or she alone must pay the tax. The burden of the tax cannot be shifted from one person to another person. So whenever the government imposes a tax, the person must pay the tax. So that is called direct tax. Example of direct tax are income tax, wealth tax. When a person's income exceeds the basic exemption limit, then the person has to pay the tax. Similarly, wealth. One basic exemption limit is given for the wealth. Over that, if a person holds the wealth, he is liable to pay the tax. That is called direct tax. So direct tax are those taxes which are imposed on a person's either income or wealth, and the tax liability cannot be transferred. So remember, first point, that direct taxes are the taxes which is imposed by the government on the income of the people or wealth of the people, and this tax cannot be shifted to any other person. For example, if my income is more than basic exemption limit, the law says you have to pay the tax. So I have to pay the tax from my own pocket on my income. I cannot shift the burden to any other person. Next one, in other words, the tax is levied directly on a person's income and wealth. That is known as direct taxes. The meaning, why direct taxes? Because when the government imposes on the person alone must bear the tax, must pay the tax. The person on whom the tax is imposed is personally liable. That's why it is called personal tax. The direct taxes is also called personal tax because it is imposed on a person and only that person has to pay the tax. In other words, he cannot shift the burden, transfer the burden to others. Hence, these taxes are known as personal taxes. Once the government imposes the tax on a particular person, from his own pocket he has to pay, cannot shift the burden to another. A direct tax is paid to the government by the person on whom it is imposed. Income tax, profession tax are examples of direct tax. This is important, you have to remember. The income tax, the profession tax, etc. These are the examples of direct taxes. Now, what are the merits and demerits of direct taxes? In examination, you may get a question, what are direct and indirect taxes, and explain the merits and demerits. Merits and demerits means what are the advantages and disadvantages. Both the taxes will have advantage and disadvantage. First, we study about merits, advantages. The first is economy. That means the collection charges of the tax is less compared to indirect taxes. That means less staff is required for collecting the direct taxes. The government does not require to keep a huge army of officials to collect the tax. Only few officials are enough. That means it's more economical. Then secondly, certainty. Certainty means the taxpayer knows when to pay the tax, how much to pay the tax in advance. He has to calculate his own total income and he has to calculate the taxes according to the rates given by Income Tax Act. And he has to find out what is the due date, when the tax has to be paid. Everything is certain. The law has clearly specified that these are the rates of tax, this is a due date, everything. So the taxpayer knows in advance when he has to pay the tax. Similarly, the government also can be able to estimate how much we can be able to get the taxes, direct taxes. Next one is elasticity. Elasticity means the taxes can be increased or can be decreased. By increasing or decreasing the rate of tax, the direct taxes will be increased or decreased. So if the government see that the income of the people is increasing, standard of living income is increasing, the government may increase the tax rate. Similarly, if the government see that the income has been diminished due to inflation or due to any other factors, the income is reduced, the government will reduce, the law will reduce the tax rate. That's why it is elastic. Next, equity. Equity means tax is not applied on every person. The rich people will be taxed more. The poor people whose income is below the basic exemption limit will be exempted from tax. Not necessary. So don't think that every person has to pay the tax. Only rich people have to pay the tax. So in this way, it is equity. That means the direct taxes will, satisfy the function of tax, that is equity. More tax on rich people, less tax on poor people. Convenience. Normally, the income tax, the direct taxes will be collected at the source. When the income is generated, at there itself TDS will be made, tax deducted at source. So it will be convenient on the part of the taxpayer that at the time of earning the income, at that time itself taxes are paid. Next one, civic consciousness. The people will know that how the government is spending their revenue which is obtained from taxes. Suppose I am paying the tax, I will have civic consciousness. I want to know how the government is spending my money, the taxpayers' money. So by imposing these direct taxes, there will be civic consciousness. People will try to find out how the government is spending the tax money. Last one, reducing the inequalities. If there are no direct taxes, what will happen? The difference, the gap between rich and poor will widen. Because money multiplies money. Rich will become more richer and poor will always remain poorer. The gap will increase between have and have-nots. So this direct taxes is a powerful tool to reduce the gap of inequality. That means the government will collect huge taxes from rich people and spend the money on the poor people by giving subsidies, rations, etc. In this way, reducing the inequality. So these are some of the merits of direct taxes. Now what are the demerits? What are the disadvantages? The first disadvantage is unpopular. The people will not willingly pay the tax because they say that tax is our hard-earned money. We are parting our money with the government. Simply we are giving the money to the government. So people does not want to pay the tax. It is not popular. There is some dissatisfaction on the part of the taxpayer that my hard-earned money is being paid to the government. It is unpopular. Secondly, inconvenience. That means the person has to pay the tax. If there is no TDS, then lump sum amount has to be paid in the assessment year. It will be inconvenient for the taxpayer to pay huge tax when he has already earned the income and spent it in the last year itself. Next, complex laws. One of the disadvantages of direct taxes is there are elaborate provisions. A number of provisions are there regarding how to calculate the tax. What are the deductions? What are the exemptions? What are the different rates? What is the due date? So much of, complex law is there. Every person cannot be able to understand the law, cannot be able to implement the law. It is difficult to implement the law. Complexity is more. Next one, arbitrary tax rates. The government will fix the tax rate. So sometimes the tax rates are not justified. The government will think that the people income has increased. Now we increase the tax rate, due to which there will be resistance in the mind of the people to pay the tax. That's why arbitrary tax is a possibility of evasion. See here, This possibility of evasion is there in direct tax by not showing the income. That is called black money, unaccounted money. People will not honestly show their incomes. In this way, the tax will be reduced or no tax will be paid. So it is difficult to find out exactly how much is the income of the people to put correct tax. There is a possibility of evasion of tax, avoiding the tax. So these are some of the demerits of direct taxes. Now I am coming to the next, indirect taxes. The taxes which are imposed on goods and services which are consumed by the people. So on the income, there is a tax, that is direct tax. On the purchasing of goods or services, the tax will be applied. For example, from morning till evening, we purchase, we consume so many commodities, so many services. So at the time of purchasing those goods, at the time of purchasing, taking the services, we are paying the tax. So simply, indirect tax is a tax on the goods or services. Now, if the price is levied on the goods or services, then it is known as indirect tax. Indirect taxes are collected by middlemen in the channel of distribution of goods and it is remitted to the government treasury. So who will pay the indirect tax? The middlemen in the channel of distribution. Example, goods are produced in the factory, but ultimately goods will be consumed by the people. So there is a channel that first of all goods are produced in the factory, then it will be transferred, it will be sold to the wholesalers, then retailers to consumers. This is a channel of distribution. Between this channel of distribution, we have businessmen. Wholesalers are there, retailers are there. They have to pay the tax to the government treasury, right? Like for example, in case of producer, the factory owner, the producer is making the goods. So at the time of goods are made, the government will impose excise duty. The excise duty is a form of tax on production. Now this excise duty is included in the cost of production. And the producer will take that money of excise duty from the wholesaler. The wholesaler has to pay the excise duty to the producer. That means the excise duty is included in the price of the goods to the wholesaler. Now wholesaler will sell the goods to the retailer. Now here sales tax is applied. The wholesaler will have to pay the sales tax. So he will include the sales tax in the goods. The wholesaler will sell to the retailer. Now retailer have to again collect the sales tax. In this way he will include the tax in the goods. So ultimately, when the goods reach the consumer hands, it includes the cost of the goods, the profit of the middlemen and the taxes. All these are grouped, combined in the price of the goods. That is called indirect. The payer is one person and ultimately burden will be on the another person. Whereas in case of direct taxes, the payer and the bearer will both will be same. The person who pay the tax and the person who bear the tax, both are same in direct. Whereas in case of indirect taxes, the payer is one person, but ultimate burden is on another person, right? Now, indirect taxes are the taxes charged by businessmen. First he pays the tax and later he shifts the tax burden to ultimate consumer by charging a higher price. Example, an electronic shop. The electronic shop has purchased the AC, air conditioner, for rupees 35,000. So buyer, shop owner, the businessman has purchased the AC for 35,000 and the businessman has charged some 5,000 rupees his profit, 40,000, 2,000 rupees taxes, 42,000. So ultimately the tax will be paid by the businessman. He is collecting 5,000 rupees tax on each air conditioner. Now this 5,000 rupees will be paid to the government in the form of taxes. When the goods are sold, it will be sold at 42,000, including the sales tax, including his profit, 42,000. Now ultimately burden is on the consumer. Actually the cost was only 35,000 to him, to that he has charged 2000 rupees profit and 5000 rupees taxes. The ultimate burden of the tax will be on the consumer. Now, the price charged to a consumer includes cost of goods sold, profit margin of the seller, and indirect taxes paid. Just now I told you, when we purchase the goods, any good when we purchase, it includes three things. The cost of production of that good, plus the profit earned by the seller, and thirdly, taxes. Example, just now I have given, the businessman has purchased the AC for 35,000. It is a cost for him. To that he has added 2,000 profit. So 35,000 plus 2,000, 37,000 plus 3,000 rupees taxes, total 40,000. So three things are included: cost of goods sold, profit and sale. Indirect taxes are also termed as hidden taxes because the purchaser of the goods is not aware of how much tax is paid for purchasing the goods or services. Now see here, this direct taxes are called personal tax, whereas this indirect taxes are hidden taxes. It is completely hidden in the price of the goods. Example, when we purchase the air conditioner, we will not ask how much is the cost to you, how much profit you are earning, and how much is the tax you are paid. Simply, I will ask the shopkeeper, what is the price of this air conditioner, AC. So the shopkeeper will say the price of this AC will be 40,000. 40,000, that's all. In that 40,000, cost is included, profit is included, taxes are also included. Hidden completely. Taxes are hidden in the price of the goods. The people will not be able to know how much taxes they are paying to the government. Now, sales tax, excise duty. Now, examples. Here, direct taxes are given the examples of income tax and professional tax. Here, the examples are sales tax, excise duty, customs duty, service tax, goods and services taxes, GST are the example of indirect taxes. So many indirect taxes are there. Example, GST is an indirect tax, customs duty is an indirect tax, sales tax is an indirect tax, and export duty, import duty, custom duty, everything will go on indirect taxes. Now, in addition to direct and indirect taxes, local authorities charge water tax, sewage tax, municipal tax, property tax, etc. So don't think that taxes are only two types, that is direct and indirect. Apart from these direct and indirect taxes, the local authorities, the municipalities will take the taxes in the form of water tax. That means the government is bringing the water to the house of the people. For that, tax is applied. Similarly, sewerage tax. Sewerage tax is there, property tax is there. So these are the local taxes which are imposed by local authorities. Now, merits. There are merits and demerits of indirect taxes also, just like direct taxes. The merits are convenience. That means the people will not feel the pinch of tax because the tax is hidden in the price of the goods. They will not feel much. Next one is productivity. Productivity means the collection. That means the taxes collected is huge amount to the government because the taxes are applied on the goods, and we don't have limited goods. We have unlimited goods. So many goods and services are consumed by the people. So as the demand for goods and services increases, the taxes will also increase. So it is more productive. So from government point of view, a major chunk of taxes coming from indirect taxes. Less amount will come from direct, but more taxes are coming from indirect taxes. That's why it is more productive. Then minimum evasion. Tax evasion possibility is there in direct taxes. By not showing the income, by showing less income, there is a possibility of evasion. But in case of indirect taxes, tax evasion will be very low because the taxes are included in the prices. When we pay for goods, the taxes are included in the price of the goods, so we will not feel the pinch. So everybody will pay it. So it is minimum evasion. Wide coverage taxes will be applied on all the goods and services produced and which are consumed by the consumers, people. So wide coverage, as the number of goods are more, the taxes will also be more. As the services increases, taxes will also increase. So wide coverage. These are the merits of indirect tax. Now demerits, uncertainty. Because the taxes depend on the sale of goods, on the demand of goods. If the demand of goods comes down, sales will decrease. When sales decreases, the taxes will also decrease. So there is always uncertainty about the indirect taxes. Government cannot be able to accurately estimate how much money we can be able to get, how much revenue we can be able to get from indirect tax. It is uncertain. Next one is violation of ability to pay principle. Actually, one of the principle of taxes is taxes should be applied according to the ability of the person. If a person is having more ability, he has to pay more taxes. If a person is having less ability, less taxes. That is a principle, equity principle. But in indirect taxes, there is a violation of this principle of equity. Why? Everybody have to pay the tax. For example, a middle class person, a lower middle class person is purchasing petrol at rupees 110 rupees per liter. So he is paying 110 per liter petrol for his moped, for his small bike. And a car, a BMW car, they are also purchasing the petrol for 110 rupees. He is a rich person. That means everybody is paying the same price. The poor people is also paying the tax and the rich people is also paying the same amount of tax. So where is the justice? Where is the equity? So there is a violation of equity in case of indirect taxes because all rich and poor, everybody is paying the tax. Next one, inflationary in nature. Inflation means increase in the prices of goods and services. Inflation is a global phenomenon. In every country there is inflation. The prices are increasing. One of the reasons why prices are increasing is taxes are more. Taxes are more. So due to the taxes, more taxes, the prices are increasing. When prices are increasing, there is an inflation. So this indirect taxes will stimulate the inflation. That is a consequence. Next one is high cost of collection. In case of direct taxes, cost of collection will be less, more economical. Few officials are required to collect the tax. But in case of indirect taxes, a huge army of officials have to be kept by the government to collect the taxes. So collection charges are more. Last one, absence of consciousness. There is no civic consciousness in case of indirect taxes. People does not know. When we ask somebody, at what price you have purchased the air conditioner? He will say 40,000. That's all. He says that I have paid only the price, but he doesn't know that in that price, taxes are also included. There is lack of civic consciousness. When there is lack of civic consciousness, they cannot, ask the government how our money is being spent. They are unaware from where the government is getting the revenue, where the government is spending the money. The people does not know because they are not conscious about paying the taxes. Whereas civic consciousness is there in direct taxes. So these are the demerits. Now, one of the important questions which is asked in examination, what are the differences between direct taxes and indirect taxes? The first difference, direct taxes are levied on the income and wealth of the person. It is called personal tax. The burden cannot be shifted. Direct tax. Indirect taxes are those which are levied on the manufacture and sale of goods and services. That's why it is called goods and services tax. And they shift the burden, tax burden. In case of direct taxes, the tax burden cannot be shifted. When the tax is imposed on a particular person, he alone or she alone has to pay. In case of indirect taxes, the burden can be shifted to the ultimate consumer. Next one, the taxpayer knows the tax liability, time, amount, how to be paid. In case of direct taxes, it is completely certain. The taxpayer know in advance what is the rate of tax, how much is the amount of tax, when the tax has to be paid, everything is certain. But in case of indirect taxes, businessmen may charge higher price. The people doesn't know how much is the rate of tax, what rate is applied by the businessman, he is completely unaware. When a person goes to buy an AC, he will not ask the breakup. You are selling the AC for 40,000. Come on, show me how much is the cost, how much is the profit, how much is the tax. Nobody will ask, right? So people does not know how much tax they are paying. Here, increase in tax rate may reduce savings and investment. If the tax rates increases, the saving of the people will decrease. Saving decreases, investment will also decrease. That is the effect of increasing the direct tax rate. Whereas if indirect tax rates are increased, it leads to inflationary situation. Inflation will increase if there is increase in indirect tax. Next, there is a scope for tax evasion. In case of direct taxes, there is a possibility of tax evasion. The people may not show the true income, or the people will show the less income in order to reduce the tax liability. So evasion is possible. Whereas in case of indirect taxes, the tax evasion is difficult because the taxes are included in the goods. They have to pay at any cost. Next one is the government has to establish link with every taxpayer. As such, the cost of collecting to the government will be higher. So every taxpayer will have one tax officer. So there is a direct relationship between ITO, income tax officer, assessing officer, and the assessee. There is a direct link. That's why the collection charges will be more. But here there is no direct link between the payer of the taxes and the government. Because taxes are collected from the middlemen, from the businessmen, paid by businessmen, but ultimately borne by the people. Then next one is the taxpayer is having civic consciousness. One important difference is, in case of direct taxes, the taxpayer will have civic consciousness because he is parting his own money directly to the government. So he wants to know how the government is spending the money. So he is having more civic consciousness. Whereas in case of indirect taxes, no civic consciousness, because the taxes are completely hidden in the price of the goods. They are not feeling the pinch of paying the tax. So no tax, civic consciousness. Last one, ability of the taxpayer is taken into account and thus satisfy the principle of equity. Just now I told you, principle of equity says more taxes on rich people, less taxes on poor people. The taxes will be applied according to the ability of the person to pay the tax. So this principle will be applied in case of direct taxes. But the principle of equity is not applied in case of indirect taxes, because taxes have to be applied on everyone. Whoever consumes the goods and services, they have to pay the tax. Whether the goods are consumed by rich people or poor people does not matter. Everybody have to pay the tax. That means the principle of equity is violated in case of indirect taxes. So this explanation will be enough for writing the differences between direct taxes and indirect taxes. Inshallah, we'll continue the next topic in the next video. So if you are satisfied, give a like to the video. Share my channel among your groups, among your friends, so that more students can watch the video and enhance the knowledge. Give your comments on these videos and subscribe if you have not yet subscribed to my channel. By the super thanks which is given below my video, inshallah, we'll continue the next topic in the next video.